Hello everyone. Today I am excited to discuss a compelling opportunity in the Indian financial services sector. This sector is currently trading at an attractive valuation while also offering significant growth potential in the coming years. In nominal GDP terms, India is the fifth largest country globally and is projected to become third largest by 2030. This forecast implies a healthy double-digit growth in nominal GDP. The financial services sector will play a crucial role in this journey, with companies in the sector expected to grow at even faster rate. Consequently, we believe that this sector offers promising investment opportunity. Before I proceed further, I want to highlight an important point. When we talk about financial services sector, we are referring to lending companies including banks and NBFCs like housing finance, gold finance, infra finance. Additionally, we are also referring to non-lending companies such as insurance, asset management, stockbroking and fintech. Lending companies have been growing at a healthy pace. Their asset quality and return profile have steadily improved over the last 5 years, and they are currently trading at valuation well below their historical averages. Hence, they offer a very attractive risk reward currently. Equally exciting are the growth opportunity in the non-lending space. Over the last 10 years, the share of financial assets in Indian household savings has increased from 40% to 45%, while share of physical assets has decreased from 60% to 55%. Within the financial assets, the share of equities and mutual fund has risen from 2 to 7%. This trend indicates that Indian households are increasingly channeling their savings into more productive assets. On the back of this shift, we have witnessed substantial growth in some non-lending segment in past few years. But despite this growth, the penetration of these products and services remains very low, given the size of our population and penetration levels seen in more developed countries. Let me explain this with a couple of examples. Over the last 10 years, the AUM of Indian mutual fund industry have grown from 10.5 lakh crore rupees to 68 lakh crore rupees, an impressive CAGR of 21%. However, the mutual fund assets still accounts for only 5% of the household savings, suggesting a long runway for growth. We have seen similar trend in the United States, where equities and mutual fund have outpaced other asset classes in household assets. We believe India will follow a similar path. Another example is of the insurance industry. In India, 2/3 of the medical expenditure is paid out of pocket by consumers compared to 36% in China and less than 20% in major developed countries. The situation is similar for life insurance, with only 3% coverage in India compared to double-digit coverage in most developed countries. Given the under-penetration of insurance in India, this sector also presents a significant long-term growth opportunity. In summary, we believe both lending and non-lending companies present a long-term investment opportunity. Lending companies provide growth with favorable risk-reward profile, while non-lending companies offer exciting growth prospect. This sector can be essential part of every investor portfolio, and this can be done through the HSBC Financial Services Fund. In our fund, we aim to maintain a balanced representation of both lending and non-lending companies, as well as companies across market capitalization. This will be in contrast with the benchmark index, which is heavily skewed towards lending and large cap companies. Lending company constitutes around 80% of the BSE Financial Services Index, while large cap companies have around 76% weight in the index. We believe our more balanced approach better reflects the opportunity in the sector and help us generate alpha. We look forward for your active participation. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.